prepare income and expenditure account as well as closing balance sheet. From opening balance sheet as well as receipts and payment. So we have been given opening balance sheet as well as receipts and payment. From that you have to prepare income and expenditure as well as closing balance sheet. So when it is all about non-profit organization, 4 sets are there. One is all about opening balance sheet. Usually we call this being statement of affairs opening. Second being receipts and payment, which is nothing but a cash book. Third being income and expenditure, which is nothing but similar to P&L account, nominal account. And fourth one being the balance sheet closing. Usually 1 or 2 ledgers may be given or statements may be given, so rest you have to prepare like. Okay, and sometimes 2 statements given, rest of the ideas may be given as an adjustment format, so you have to incorporate those adjustments. If it is a statement or account form, you have to record once. If it is given in adjustment form, always remember it should be entered twice. If you follow this logic, then you can simply solve. It's a basic logic. Twice mean every debit will have equal credit like. That logic you have to follow to solve the illustration comfortably. So, some cases opening balance sheet and receipts and payment may be given, so you may be asked to prepare these 2. This is given and these 2 are going to be prepared. Clear? And to prepare these 2, some adjustment may be given. Some advanced level problem where these 2 given and you have to prepare these 2. Some cases all the details are available as a rough data. Using that rough data, you have to prepare complete opening statement of affairs, receipts and payment, income and expenditure as well as closing balance sheet. In this particular illustration, we have been given these 2. So our duty is confined with preparation of these 2. So for preparing these 2, of course, you have to understand this particular logic. Account is anything given in the statement form or account form should be posted only once. In case any details is given as an adjustment, should be posted twice. Right. So receipts and payment. Receipts and payment. Come on. From the receipts and payment, where I am going to transfer. That's very, very important. Where I am going to transfer. To the income and expenditure account and then balance sheet. In receipts and payment, the debit side is usually named as receipts, credit side is named as payments. And in income and expenditure, credit side is the income, like P&L account. In P&L account, credit side will show only the incomes as well as any gains. In the debit side, it's the reverse, expenses and losses. Similarly here, expenditure. We have the receipts. What are the receipts we have? Maybe revenue receipts, capital receipts. Similarly, we have revenue payments as well as capital payments. In case of revenue receipts and revenue payments, that will be transferable to the income and expenditure account, and capital receipts and capital payments will be transferable to the balance sheet. For example, selling the asset and recovering the cash, sale of asset. What happens here? This is not revenue receipt. Sale of asset will not be posted in the income side, isn't it? Sale of asset is nothing but encashing the fixed assets, non-current assets. Usually, this value will be subtracted from the assets value in the balance sheet. If there is any profit or loss on sale, that will be of course shown in the income and expenditure account. And revenue receipt is nothing but sale of normal commodity. Otherwise, in case of non-profit organization, subscription received or donation received, these things will be there. That subscription and donation may be used for the years running. So automatically, the revenue receipts will be transferred to the credit side of the income and expenditure account. Clear? Hope now you'll be able to understand. This part will go to where? Income and expenditure account. The rest of the things will be transferable to balance sheet. Similarly, in case of revenue payments, what may be the revenue payments? Probably salaries paid to the workers, even advertisement, some expenses you spend for stationery, all these things, right? So salary, rent, electricity, all these things are going to be in the payment side. Naturally, it's an expenses transferable to the income and expenditure account. And in case of probably borrowings or capital fund received or some donation received for a specific purpose. In the previous class, we have studied that donations for constructing any assets or endowment donations. Any endowment donations collected will be invested in some way. Returns of that donation can be used for distributing for any prizes like we discussed in the Nobel Prize. So, good example for the endowment. So, if you are receiving for a specific purpose, not to be spent in the year itself, could be spendable in the later period, then it's called capital payment. Capital payment as well as capital receipt. So, here capital payment, no, rather than donation, maybe purchase of asset. Okay, purchase of asset. Now, subscription received, okay, maybe 1,000. How much it will appear in the income statement? Will it be the same value or the value gets adjusted? Huh? So, it gets adjusted due to what? Because of the outstanding advances of the current year as well as previous year. The monthly subscription being 100 for a year, 100 rupees into 12, 1,200 is a yearly subscription. Clear? But out of the yearly subscription, only 1,000 is received. Another 200 being outstanding. This 1,000 appears in the receipt side of the income, means receipts and payment. After adding that outstanding, this 1,200 is considered as income. Whenever you talk about income, that represents for the year, matching concept. Whenever we talk about the receipts and payment, the actual encashment will be considered. So that's how we learned in the previous class with the basic illustrations here. Subscription received is the actual amount you get in cash, usually shown in the receipt side. And by adding the outstanding and advances, the year's subscription will be your income transferable to the income and expenditure account. Is that clear? So from the receipts and payment, you pick this value. From the adjustment, you do all this plus or minus, and final value what you arrive will be transferred to the income and expenditure account. Some illustration, income and expenditure may be given. You have to find out the receipts value and payment value. Then what you have to do? Post that value here, post all these things, do the reverse calculation, find this and transfer to the receipt side. Is that clear? Hope these things will be applicable here. Now to master with this, so we'll now try to solve the question number 4 so that you'll be able to understand all this logic comfortably. Before I proceed further, let me first finalize whether the receipts and payments are capital nature or revenue nature. So I have been given balance sheet assets and liabilities, opening, and there is statement of affairs and receipts and payment, other information is also there. You are required to prepare income and expenditure account for the year ended 31st March 2024 and balance sheet as in the date. Okay, let me now open all the ledgers. Come on, you can join with me to solve this illustration. You just join with me and solve along with me, right? You don't wait for completing my illustration. Clear? So you have to open income and expenditure as well as balance sheet. Income and expenditure. Come on, open the ledgers. And then balance sheet. And then balance sheet. Now, how can you proceed this illustration? How can you proceed this illustration? So, let me mark down all these items here. Fifth adjustment, applicable depreciation rates. Applicable depreciation rate for the land and building 2%, for furniture 8%, for laboratory equipment 10%, for library books 20%. I just marked down. I'm not solving, right? I can solve this later on. And tuition fee outstanding as on this date being 40,000 rupees, outstanding tuition fee. Right, and outstanding Then there's an adjustment for the tuition fee. I put the dot here representing there is an adjustment. Salary of teaching staff outstanding. Salary. Okay, payment side. Teachers and staff. So there is an outstanding in this amount also. Book received as donation from various parties, 30,000 value. No information given, so I'll just keep it pending. Outstanding building repair expenses. So building repair expenses, where is that? Building repair. There is an outstanding. So wherever there is an outstanding, I just put the dot here. That's all. Right. Apart from that, that's all. Fifth one is already dotted in the opening balance sheet itself. Right. Now, I'll start posting from the balance sheet first of all. I'll start with the values given in the asset sides to be posted here. Yes. Start with the land and building. Closing balance sheet. Land and building will be posted in the asset side, the value being 20 lakhs. 20 lakhs. And minus depreciation applicable for this being 2%. I'll calculate the depreciation at the last. I'm not aware about whether there is any further purchases or not. So I keep it pending. Furniture. Any value given in the statement form or account form will be posted only once. If it is given in the adjustment, should be posted twice. So here, furniture 3 lakhs. The depreciation on that being 8%. Laboratory equipment, laboratory equipment, 2.5 lakhs. 2.5 lakhs. An applicable depreciation for that being 10%. Library books. The value being 3.6 lakhs. 3.6 lakhs. Is that okay? The applicable value in this case being 20%. Investments. We have 6.5 lakhs here. Accrued tuition fees. So, accrued tuition fees is nothing but outstanding tuition fees. Right. Now, I'll keep all these things here. Liability side items also. If there is accrued tuition fees, what you have to do? You have to add, in case of closing, in case of opening, it should be subtracted. Tuition fees outstanding appears in the asset. What does it mean? It's an income outstanding. So probably this club is collecting the tuition fees. That may be the predominant income. Yeah, New City College. As it's being the college, definitely they will recover the income by way of tuition fees. In that income, accrued means outstanding in the previous year. As you know that format here, tuition fees. Okay, working note number 1. Tuition fee received. Tuition fee received. Add outstanding of the current year minus outstanding of the previous year. This is nothing but outstanding of the previous year. So I have to subtract this one. Outstanding of the previous year. I'm not aware about the other things, so I just keep as it is. This value being 10,000 rupees. This value being 10,000. Okay, anything given in account form should be posted once. So I have posted this. I have posted this once. Clear? Accrued tuition fees. I have posted this once. Clear? Now, posting in the adjustment working note is also considered as posted once. No need to worry about that. What about this cash and bank, sir? This cash and bank requires no posting because directly go and see the receipts and payment where this may be appearing as the opening balance. So requires no posting for this only, right? Mutually cancel. Here 130, here 130 cancel. So requires no posting here. Clear? The cash and bank balance given in the opening balance sheet will be the opening balances in the receipts and payment. You no need to post that. So mutually cancel. Mutually cancel. It is also not posted and it is also not posted. So with that, I have completed posting the values given in the asset side of the opening balance sheet or opening statement of affairs. Now I don't again refer that one hereafter. Okay, so once you completed posting one of the items, then you should not go and refer back. Okay, finish up immediately. Now let's start with capital fund. So usually the capital will not be called as capital here. It will be named as capital fund or general fund, right? So here the term is capital fund. Sometimes it may be general fund. So no one is owner for this trust or non-profit organization. It's a collective support purpose started, right? So we'll start with the capital fund here. The capital fund in this case being 21 lakhs. 21 lakhs. If there is any surplus, will be addable with the capital fund. If there is any shortage, by preparing income and expenditure, can be subtracted from the capital fund, right? Now, building construction fund. What does it mean? It's a specific amount collected and kept separately. Can be used for the later on purchase of the building. If you are purchasing the building later on, for that this 8 lakhs can be used. So here, building construction fund. Otherwise, simply building fund. There may be some changes. We are not sure. So currently, I will put the value being 8 lakhs here. General fund outstanding. General fund outstanding. Okay, I'm not sure what is general fund outstanding. Okay, I'll keep it pending, this item. Okay, maybe some other donation. We'll keep it pending. I can work out that separately. Otherwise, I'll just put that value here. General fund outstanding. 6.4 lakhs. 6.4 lakhs. Outstanding salaries. Now let's go for the second one. In the second one, salaries paid. This is expenses. Am I right? Payment. Outstanding of the current year should be added. Outstanding of the previous year should be subtracted. So minus outstanding of the previous year value. This previous year value in this case being 1 lakh 60. 1 lakh 60 is subtracting value. Clear? So with that, I have posted all the items given in the opening balance sheet. Okay, I'm not sure what is about the general fund here, so I just put in the liability side as it is. If there is any adjustment, I can incorporate later on. Now let's start with the receipt side. In the receipts and payment account to be posted here. Opening balance is not required to be posted. It's mutually cancelled with respect to the cash balance in the opening statement. So rest of the 5 items are going to be posted here. I'll pick these 5 items to be incorporated one after one. Now, government grants received. So if there is any receipt, you have to cross verify whether it is being the revenue receipts or capital receipts. Definitely, it's a revenue. It's a properly stated, so it's a revenue. Donation for building. It's a specific donation we borrowed, we collected only for constructing the building purpose. Already we have the building fund. So year on year, the trust or society may collect the donations from various investors or various contributors, accumulate it for 4 or 5 years later. If the accumulated amount is sufficient enough to purchase the building, immediately they go for purchasing. So donation being the capital receipt. Tuition fees and session charges, revenue nature. Investment income, revenue nature. Rental income, college hall. So as it's being the college institutions, they have the hall. Now and then they can let it out for some other general purpose also. Because of that, they get some extra revenue, also revenue nature. So these are revenue nature. Now I'm going to incorporate all these things in the concerned ledgers. Government grants being the revenue will be my income. Post that in the income side. Government grants. As it is a college, usually fee, the salary payable to the staff will be collected from the government by way of government grants. We have collected around 50 lakhs. Donation for building will be addable with this. Already we have how much? 8 lakhs up to the earlier year, last date. In this year, we collected another 2 lakhs. So hereafter, we have the amount of rupees 10 lakhs for building fund. Okay, if the building fund is sufficient enough to purchase the building, then they will use it for purchasing the building. And tuition fee and session charges, it's a received one. So already we have the tuition fee receipt side here, 18 lakhs 20,000 rupees. 18 lakhs 20,000 rupees. Right. Though we received 18 lakhs 20,000 rupees, it includes 10,000 being the outstanding of the previous year could have been included in this current year's receipts. So the current year tuition fees after the adjustment may be 18 lakhs 10,000 rupees. Is that clear? And investment income. Investment income is general one. So investment income. Income from investment. This value being 70,000. Rental income also revenue receipt. So rental income. Rent, simply rent, 40,000 rupees, rent received. So I have posted what? All the receipt side items. All the receipt side items were posted. Now let's start with what? Payment side items. I will go up to audit fee. Up to audit fee. Let me finish up to audit fee. Thereafter, second block can be solved. Salaries and allowances. Already we have salaries working note here. 42 lakhs paid. 42 lakhs. There is outstanding of rupees 1,60,000 related to the previous year. The payment 42 lakhs includes the payment 1,60,000 for the previous year value. Previous year value. So you have to subtract this to find out the actual salary payment or salary expenses for this period. Maybe 40 lakhs 40,000 rupees. 40 lakhs 40,000 rupees. And here it is 18 lakhs 10,000 rupees. 18 lakhs 10,000 rupees. Non-teaching staff. Non-teaching staff 20 lakhs. Okay. Expenses for non-teaching staff. Non-teaching expenses. The payment made for the non-teaching staff 20 lakhs. So lecturers and teachers know their salary will be called as teachers and staff and salary for them. Non-teaching is nothing but administration, the office staff and watchman, gardener, and for the other thing other than the teachers, no, their salary will also be forming part. That will be called as non-teaching staff salary. Printing and stationery, no information given, only direct information. Printing and stationery may be revenue expenditure 80,000 rupees. Laboratory expenses, lab expenses, revenue expenditure. So the value being 60,000. Laboratory equipment, asset. Lab equipment is an asset. Already we have the lab equipment 2.5 lakhs. With that I have to add 1.2 lakhs. Add 1.2 lakhs. Is that okay? New lab equipment purchased. Already we have the lab equipment 2.5 lakhs. Now we purchased one more value, 1.2 should also be added. Library books 2.5 lakhs. Library books. Already we have library books, how much? 3.6 lakhs. With that another 2.5 lakhs worth library books were purchased. Is that okay? So in case of lab equipment, already we have 2.5 lakhs. There is new purchase 1,20,000. Apart from that, library books, already we have how much? 3,60,000, and there is purchase 2,50,000. 2,50,000. Apart from that, we have been given office expenses shown in the expenditure side, value being 60. Electricity and telephone 75,000, and audit fee, also revenue expenses 2,000 rupees. Clear? So up to audit fee we have completed. Further from municipal tax onwards up to the closing balance. Yeah. In case of municipal taxes, we don't have any adjustment. So post here municipal tax. This value being 1,000. Building repairs, I have put dot here representing there may be some adjustment. So only one dot is there. So I assume it has only one adjustment. So building repair expenses, sorry, expenses side, building repairs. This value being 40, I just do the adjustment later on. Purchase of furniture, Let's go for the furniture. Furniture is an asset. Already we have furniture worth rupees 3 lakhs. Now there is a purchase of new furnitures in this year. For that the payment being 80,000 rupees. Games and sports equipment. Games and sports equipment. Sports expenses, sorry. Games and sports expenses. You have to write along with me. This value being 20,000. Welfare expenses. Welfare expenses. This value being 30,000. This value being 30,000. New investments. New investments. Already we have investment 6.5. With that, new one will be addable, so which is 1.5 lakhs. Closing balance. What does it mean? Closing balance. As it is being the receipts and payment, the closing balance is nothing but bank balance or cash balance. Goes to the balance sheet asset side. So cash. This value being 92,000. So I have completed posting the receipts and payment account details in the income and expenditure account also. Now let's move on to the next one. I can finish up the fifth adjustments, depreciation, because all the purchases details were incorporated. So we now claim the depreciation only, one after one. For the land and building, no change happened. 2% depreciation will be charged on this. Come on, 2%, 40,000. 40,000 will be the depreciation. So 19,60,000 rupees will be the final value. That depreciation is an adjustment item, should be posted twice. The another posting will be the in the income side of the income expense, sorry, expenses side of the income expenditure account. So depreciation. Depreciation for what? For land and building. LNB, the value being 40,000. In case of furniture, there is an adjustment. 3,80,000 rupees. Depreciation applicable on furniture being 8%. So I'm not sure whether I can calculate the depreciation on the entire value or not. If there is any information, you can cross verify. As no information given whether the depreciation will be calculated for full year or half year, or no depreciation for the newly purchased item. If the newly purchased furniture is given with the date of purchase, then you can calculate proportionately. If the date is missing, you can assume it may be eligible for the full year's depreciation, or this asset purchased in the day one itself. Or you can assume it is purchased the last, so we don't need to claim the depreciation. Or we assume an arbitrary value, probably half of the year it may be used. So you can calculate for half year's depreciation. Whatever the method you follow, just give the hint and proceed here. Let's see in our book, how did I calculate? Come on, calculate 8% on this. Come on, make it faster. Huh? 30,000? 30,400. Maybe they have calculated on the closing value. So depreciation in this case at the rate of 8%. So 8% will be applicable. 8% being 30,400. That is the depreciation here. 30,400. And balance will be 3 lakhs. 3 lakhs 49,600. Depreciation on furniture 30,400. And laboratory equipment 3,70,000 rupees. Now depreciation on this 10%, 37,000 rupees. Lab equipment 37,000. Balance being 3,33,000. 3,33,000. In case of library books, I'll keep it pending. Library books, I'll keep it pending. Right. Because I have seen donation received from various parties. The donation not in the form of cash, but it is in the form of books. Right. Then how can you show that in your books? Donation of books. How can you record? Okay. Okay. Is that some? Two entries. Double entry. In your income side, you show this being the donation and add that to the library books account. Double entry. If you're getting the donation, donation to cash. Sorry, cash to donation. Okay. Here, you don't get the cash, but you are getting the books. Then books account debit to income account or donation account. Okay. Double entry. So I'll incorporate the third one here. In income, donation. Donation by way of books. How much is that? 30,000. So we have completed third one and fifth one. Okay. So the next entry being, it should be addable with the books. Add donation. 30,000. Then ultimate value being 6,40,000 will be the book value. Now we can claim the depreciation on that book at the rate of 20%. Yes, 1,28,000. Balance value being 5,12,000. So you have to be very careful in this adjustment. So unique one. So book value after the depreciation being 5,12,000 and 1,20,000 is the depreciation. So book 1,28,000. Clear? Nothing stated with the investment. So the investment value being 8 lakhs. Now you can number it. You can number it here. Number 2, number 3, number 4, number 5. Okay. In case of furniture, refer working note number 5. In case of laboratory equipment, refer working note number 3. In case of book, refer working note number 4. In case of furniture, okay. So we have posted all these values. That's how we can give the cross reference also. Cross reference. The next one being, we have been given tuition fee outstanding for the current year 40,000 rupees. Double entry. Tuition fees is the income. If it is being the outstanding, should be addable. Current year outstanding should be addable 40,000 rupees. If income is outstanding in the current year, it's an asset, will be shown in the balance sheet asset side. Outstanding tuition fee. Outstanding tuition fee. The value being 40,000 rupees. Clear? Clear? Eunice, are you able to see the screen? Are you there? Eunice, come on. Now, we'll move on to the salaries of teaching staff outstanding for the current period 2.5 lakhs. Add outstanding of the current year 2.5 lakhs. If current year value is outstanding, what happens then? It's a liability shown in the liability side. Outstanding salaries. The value being 2.5 lakhs. The value being 2.5 lakhs. Now, outstanding building repair expenses being 15,000. Current year outstanding. Building repair expenses 40,000. What is outstanding here? 15,000. I can add here. And outstanding building repairs 15,000 here. I have posted all these values. Nothing left over, so I have to close the adjustments. By adding 40 with this, so 18 lakhs 50,000 should be posted as tuition fee expenses. Sorry, income. Tuition fee. The value being 18 lakhs 50,000. Income, no, sorry. Tuition fee. Donation, how much? 30,000 rupees. Tuition fee being 18 lakhs 50,000. What about this one? Salaries. 40 lakhs 40,000. With that 2 lakhs 50 will be addable. So 42 lakhs 90,000. Okay. So then this will be the expenses. Salaries for teaching staff. Teaching staff 42 lakhs 90,000. So I have posted this one, this one, this one, this one, this one. I have completed all these items. As no information given for the general fund, I keep that amount as it is. Building fund today being 10 lakhs after this year's receipt. Now I have to solve the income expenditure to find out any surplus or deficit. Hope the value being 69 lakhs 90,000 rupees. 69 lakhs 90,000 rupees. You will be getting surplus. Cross verify and confirm whether you are getting this answer or not. This value being 81,600. 81,600. So surplus will be addable here. 81,600. Now, add the balance sheet and find out whether the total is agreeing. $40 lakhs 86,600. $40 lakhs 86,600. Hope now you'll be able to get this answer. Clear?